Welcome to the Mo Show. We're on the go to put you in the know. Episode 3, we're going over the new tax laws.
Welcome to the Mo Show. I'm Mohamed Gulamali, and today we're going to talk about the new tax laws. I'm here with...
Hey, my name is Wali. I'm a CPA. My office is in Valley Stream.
Well, a lot of people have had questions. Now, one of the questions that people have been asking is, how much mortgage interest can you write off in New York today?
Right. So Mohammed, the limit before it was $1 million, right? So you could have gotten a mortgage over $1 million before, and you could only deduct the interest up to the $1 million.
Right.
But now they have reduced that limit to $750,000.
Okay. So basically now, every year they can write off the interest portion up to a max of a $750,000 amount that they're paying.
Exactly.
Every year until the mortgage is paid off.
Yes.
Okay. Another question people have been asking a lot is, in New York, how much can they write off on the property taxes?
So that has been capped for people like us who live in New York.
Yeah.
It's a high tax state.
Yes.
We pay state tax. We pay people who are living in New York City. They pay the New York City tax. So now combined, the state tax, city tax, and the property tax, you can only deduct up to $10,000 total combined.
Okay.
So if your property tax alone is $10,000,
Yeah.
and you're paying another $10,000 in local
State
and
and
state
income
tax,
Okay.
you can only deduct $10,000.
Okay.
So that's gonna hurt,
Wow.
everyone in New York.
And state and income tax, if you're paying $10,000, chances are your income is probably how much?
Probably over 100,000.
Wow.
Because the state tax rate is close to 5%,
Okay.
and city is also
Another 5.
another 4 to 5%. So
Okay.
roughly, 10,000.
Wow.
So, a lot of people are gonna lose on that deduction.
Yeah. Okay. Another question people have been asking me is this. When they buy the home and want to sell it, how did they get the capital gains exclusion? And what exactly is capital gains? Like, simplify.
So the capital gains is a profit, right?
Okay.
If you buy something at low price and you're selling at a higher price, so the difference is capital gains.
Okay.
And there's a special tax rate for capital gains, which is lower because it's not earned income.
Yeah.
And but if the capital gain is coming from the sale of your primary residence, that is exempt up to 500,000. So if you buy a house for 500,000, you live in there for at least 2 years, and let's say the value goes up to $1 million.
Yeah.
And then if you sell it for $1 million, so you have that $500,000 of capital gain, but you don't have to pay tax on it.
So you get to
Because
keep that profit.
There is an exemption, right? So you
Okay.
keep that profit.
That's definitely good.
But if you're single, it's 250,000.
Ah.
But if you're married, it's to 500,000.
Okay. What else do you think the people would like to know about the new tax laws?
So there are a few things that I wanted to discuss. So some of them are, the first thing would be the tax rates, right? All the tax rates are going down.
That would be the tax brackets, right?
Tax brackets are
Okay,
going down.
that's definitely good.
Yeah, so 10% is going to stay at 10%, and 15 is going down to 12%,
Yeah.
25 to 22, 28 to 24, and the highest bracket of 39 now is going to be 37%.
Okay.
So that's a good thing, because everyone is going to be saving a little bit on taxes. And the standard deduction is
Yes.
doubling, so that's also a good thing.
Okay.
It's doubling from 12,000 to 24,000 for married people, and for single people from 6 to 12,000.
Okay. There's definitely
Right.
opportunity in that.
Yeah, and then the child tax credit is going up. That's doubling from $1,000 to $2,000 per child.
Okay.
And they're giving you these things, but they're also taking away your personal exemptions. Before, there was $4,000 per person of personal exemption that
Yeah.
you were able to deduct. So if you had 4 people in your household, you were able to deduct $16,000. But
Okay.
now that's going
It's
to go
gone.
away. They're taking this away, but they're increasing your standard deduction.
Yeah.
So it's like, give and take. So, but it's, overall, everyone is going to benefit a little bit.
Yeah.
So, and we talked about the state taxes, mortgage. So another thing about the mortgage, I just realized was the equity,
Yeah.
right? Home equity line. Before, when the new tax law came out, they said equity line, the interest on the equity line is not going to be deductible.
Yeah.
But now they're coming up with more clarification saying that, okay, if you
It's
use
done
the
for
money
renovations.
for renovations and to make improvements on the house, you can deduct it. But if you're using that money for personal reasons,
Yeah.
to pay off your credit cards or buy a new car, it's not going to be deductible.
Okay.
All right, and then finally the health care penalty. Like before, if you don't have health insurance, you were paying a fine.
Yeah.
But now, if you don't have health insurance, there's no fine. So that's, you have an option
Okay.
not to be covered.
Options are always good.
Yeah.
All right. Well, thank you for all the
Thank
information,
you for
Wali.
having me.
Not a problem. From the Mo Show, I'm Mohamed Gulamali with Wali.
Ali.
Tell them where they can find you.
Hey, so I'm located in Valley Stream, 26 West Merrick Road, and you can check out my website, wsyedcpa.com. It's wsyedcpa.com, and I can also be reached at 516-800-7800. Thank you so much, Mohamed.
Not a problem. It was a pleasure having you.
Same here.
Stay blessed, people. Bye.